Have you heard the news that foreclosures are up 49% over last year? And what does that mean for you, the buyer, and you, the seller? Today, we're going to talk and take a look at the numbers and discuss what that means for the Seattle area real estate market. I'm Ashley Rodriguez. I work with the Madrona Group at John L. Scott. And with us, we have Joe and Jason, the founders of the Madrona Group, John L. Scott, and they're going to talk a little bit about foreclosures.
Yeah. Hey, thanks a lot, Ashley. And thanks for being with us today. This is a new thing for us a little bit with the three, but I think it looks pretty good. So pretty cool stuff. But hey, have you guys heard the news that Ashley's talking about? You're probably going to start to see some of those headlines, more foreclosures, or, the big one that we heard recently is that the foreclosures were up 49% from last year. What does that kind of mean, right?
Yeah, it's funny, the thing we find out about news is that oftentimes it's just misleading, If that was true, it would mean that all the sellers had missed the market and that every buyer should wait until the prices of houses drop.
So we can see that, so August of 2021, this year, we have had 8,348 foreclosures compared to 5,603 foreclosures in August of 2020.
Oh, wow. That's quite a increase.
So that's, it's kind of scary when you just see it, right? But let's put some perspective on that. And that's the next slide where we see August of 2019.
Wow.
Wait, what happened? Was there like a pandemic or something? I mean, why is the numbers so different? That's crazy.
That is insane.
So,
right.
But it looks like it's down about 300% from 2019. So that's weird.
Yeah. So what's really going on here?
Yeah, well, what's really going on is that, this is the pre-pandemic numbers, right? And this is what's normal. And if I show you the next slide, we can kind of see 2017, 2018, and 2019, we're averaging about 290,000 foreclosures a year. And so last year and this year, we had a moratorium, right?
Mm-hmm.
Oh yeah, people couldn't foreclose.
Right. So the banks didn't foreclose, right? The government said you can't do it. And so of course we haven't had the number of foreclosures that we normally have.
Okay, so 4 out of 5 homeowners either did not need the forbearance, or how did they make those arrangements with their bank, or having to sell or whatnot?
Yeah, well, in this case, so if we look at this next graph, what we're seeing is that 42% of people actually didn't need the forbearance.
Yeah, so what it looks like in those numbers is it looks like a lot of people went ahead and applied for it just kind of as a safe measure. I mean, if you remember, information was coming out different every day. People are losing jobs. People are getting asked to work overtime. It was just pandemonium. And so really it looks like a lot of the people took proactive steps just to protect themselves, and maybe it wasn't even necessary after all.
For sure. And then there's the 39% of the people that were able to, thank goodness, work out a payment plan or a repayment plan during this time, right?
Yeah. I mean, I think when you say when you see foreclosures anywhere, you have that oh gosh, what's going to happen kind of feel,
Yeah.
So it's good to get these statistics here because it doesn't look as bad as you think it's going to look.
Right.
Yeah.
So what we're seeing then is that only 17% of people are, like you mentioned, 1 out of 5. And I shouldn't say only, because for that group of people, this is it's not good. And obviously our heart goes out to anybody that will struggle to, make their mortgage. However, it is a smaller number, the 1 in 5 that were not able to make any arrangements at all and are probably still going to be in trouble as the moratorium is ended.
Well, that is a staggering number. I mean, there is some silver linings in this too, with the exponential growth that's been happening lately.
One of the huge differences between 2008 and this year is that back then, if you were in trouble, your house was also probably underwater, right? Meaning if you sold it, you were going to lose money. This year, however, as we see here from the National Association of Realtors, the average home in the Seattle-Tacoma Bellevue area has gained $334,000 in equity over the last 5 years.
Having been on the other side of this in a crash before, sitting here, it's actually, I know it's really hard to think about being displaced from your home when you've got a lot of roots in and you got some traditions in, but the good news is that, you know, there are ways out today that just weren't available before, you know, with this growth. So, you know, don't just go think the sky's falling. You know, you really should reach out to a local expert, a real estate expert, maybe us, and talk about your options. See what the equity in your house is. See if you've got some solutions that we can help you find.
Yeah, and it looks like things are a lot different than they were in 2008, right?
Definitely.
That's what these statistics are showing. Yeah.
Yeah.
Awesome.
Yeah. So when you hear next month that, you know, foreclosures have doubled again, keep in mind that's from a very low starting point. We basically went from 0 to double, but we're still way below where we are in a pre-pandemic average year. So.
Oh, awesome.
Awesome, guys. Well, thanks for taking some time to tune in with us.
Thanks for educating us, because, you know, we all need to know these things. And if anybody ever needs help, we know where to go, right?
Yeah.
Absolutely. You can find us at
themadronagroup.com.
All right. Thanks for watching, guys.
Thanks, guys.